Hey everybody, welcome back to FSP Forex-Stock-Predictions. Hope you are all having a great Sunday. I am the Vortex Trader and it is time for our weekly trading breakdown. This is where I go over all of this past week's previous positions. We analyze them, we check whether they won or have lost. Let's get into it. All right, guys. So on Tuesday, the 23rd of August, we were looking at the DAX 40. Still says the Germany 30 here. It has actually since been updated to the top 40 German companies. So it is the DAX 40, and we were looking at going long at a certain area right here. So let me show you what happened. Let's remove this. Let's remove this. All right, this area right here, this yellow zone of resistance, remember we were saying that if we closed above this resistance right here, we would have looked for a long setup. However, we did not close above this resistance. We wicked above it, right? We had a nice wick, but the candle unfortunately did not close. It carried on south, hitting daily support. However, yesterday, when I was not in front of my charts, we had a brilliant setup on this indice going short, right? Now, this was obviously the move that got carried out was because of fundamentals of Jerome Powell speaking, but if you managed to catch this move, this was definitely a winner because it is the exact same setup as this side. Instead, we are going in the opposite direction. So let me show you how it worked. I'm going to remove this green circle and the number 2 because that was my risk to reward. Now remember, I have shown this strategy before. It is something that I am currently forward testing. I have back tested it. Now I am forward testing it on a live account. So let's check what we do, right? We know that we wait for price to touch the top or bottom of the Bollinger Bands, okay? And we saw a great touch right here, all right? Then we look for a candle that takes out previous support. So we can see, check this out, this candle right there was previous resistance. This line right here, I'm going to draw it out for you guys. There it is, okay? We can see resistance, 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 flipped it to support, right? Came back up, closed above it, and then there we go. On this candle right there, we closed below it, right there. You see that? We closed the body just below it, and it wicked below it as well. So what do? Once I see that, I take my fib retracement tool. I go from the top of the candle wick down to the bottom of the candle wick. I extend it out like so, right? I then take my, where is it? There we go, our trend-based fib extension tool. I do the same thing from the top of the candle wick down to the bottom of that candle wick. I extend it out, and this gives me my 2 targets. Now, usually, this second target should line up with hitting the other side of the Bollinger Bands. It doesn't always have to work this way, but we can see in this example, it did just that. It actually went past it. However, this was daily support, right? So we knew that we had to have a strong move to break through this daily support, and we had this massive volume show up on this 4-hour candle, right? When the markets opened. So it definitely did. It took us right through it and right through these targets and carried on. Okay, now the entry would have been like so. We take our short position tool, we enter on the 0.236 price level, like this. We place our stop a couple of pips above the 1 level, which is also the very most top point of the wick of our bearish candle, the engulfing candle that broke through this previous support. We place it a couple of stops above, like so, and we always aim for a minimum of 1 to 2, which we can see we got. Right. If we carried on and we were trading with the news and we were trying to look for an entry, right, that managed to catch this entire move, with this particular strategy, we could have Currently, we are sitting on just under 1 to 4 risk to reward. However, I am conservative, so profits were taken just below 1 to 2. All right, guys, so this is the exact same setup as this side. Okay, remember, we always have to wait for price to touch the one side of the Bollinger Bands, like so, right? Pierce just above it, close it, and then another candle to take out that previous high. Now, you could say that, well, what about this bullish candle right here? Did that not classify as a touch? Well, we can see that it is a wick, but it is not touching the very most top point of this band, right? Yes, I am pretty finicky, but the details have to be correct. You see, we not actually touching the top line. You see, this candle closed above it, which is what we wanted to see. We want to see a candle just pierce above it, right? Just like here, we saw this bearish candle close below it. So here we saw the bullish candle close above it. And then we waited for an engulfing type of candle to take out this previous support, which we got. Our entry was on the 0,236 price points, and down she went. All right, guys, so that is how we would trade this strategy. I'm still forward testing it, so let's keep up to date with it. Whenever I do see an entry, I will definitely post it. Please remember to hit that like and subscribe button, right? Hit that little notification bell so you can be notified when I release another one of these videos, because it's pretty cool that we can go through this new type of strategy together and learn to see whether this is going to be profitable in the long run or not. All right, and that was Tuesday's trade, the 23rd of August, right? Next up, we had Wednesday, the 24th, and we were looking at GU on the 1 hour time frame. This is what we were looking at. Haha, we were looking at this flag, right? There is our flag, and we were saying, remember, I drew this massive zone of resistance right at the top of the flagpole, and I was saying that these wicks were quite large, and up above I said no break and no close, right? No break and no close plus no retrace equals no entry. Now, we did not have a break, nor did we have a close, nor did we have a retrace. What happened? Price broke below, invalidating this flag setup. So this no longer was a flag. You see, in order for it to retain its value as a flag, we would have had to see that break upwards. We needed a break upwards, and we needed the candle to close above this large wickage zone of resistance. All right, but we did not see that, guys. You see, price just meandered down and up, just like I was saying, very possible that we could just be ranging and have no possible setups on the 1 hour. So on that note, this one was not entered, which is all good. So we can now remove this for our analysis, and we can reanalyze it tomorrow when the markets open again, and we can see if there is anything on this time frame that we can get into. We can drag this down just a little bit to cover the most recent support level. Right? We can see that price is very, very bearish. And I would not be surprised if we break this current level. This bearish volume that showed up because of the fundamentals is quite large in comparison to the previous weeks. All right. Okay, so that was that. Our last trade we were looking at was on Thursday, the 25th. We were on the euro versus the dollar on the 4 hour. This one was pretty interesting. We had two. We were looking at an order block going short and a double bottom going long. Right. Now, this might look pretty messy, so I'm going to do my best to clean this up. Just remember, we had divergence on the MACD. All right, I'm going to collapse this pane just so we can have a little bit larger screen size. Right. Let's do one thing at a time, right? Let's do the order block. Okay, so let's remove this arrow. Let's remove this arrow, and let's remove this neck zone. There we go. Right, this is simply pointing to these arrows at the bottom, showing the double bottom wick. So ignore that for now. Look at this area right here. This is what I was saying. We had this order block, this candle right here. I extended it out, right? Look what happened. Price wicked right into it, collected those orders from the order block and came below. So if you manage to catch that entry, right, I always take profits at a minimum of 1 to 2, guys. I am conservative, right? Minimum of 1 to 2, 1 to 3. Look what we have. We got a great. This is a fantastic. If we held on and we managed to aim for more, we would have gotten 1 to 5, 1 to 4, depending where you would have placed your full targets. I always take profits at 1 to 2, 1 to 3. You could have placed your target down here, which would have given us a 1 to 8 or a 1 to 7, right? I love those, but I do not expect the market to give me a 1 to 8 risk to reward every time. That is why I take profits off the table at 1 to 2, 1 to 3, locking in those profits, right? Moving down the stop loss to break even. And if we get stopped out, so be it, because we are in profit. All right. So this was a fantastic order block setup, because we can see that price came up, pierced right into the zone where we would have sold, and then came back down. Okay, so let's remove that then. That was our order block going short. And then next, we had the double bottom going long. So we were playing two against each other, right? Because we were saying the bulls and the bears are really in it right now. They are fighting to see what is going on, right? This euro is still not even to the dollar. It's under 1 to 1. It's 0.996 right now. We try to get up above. Fundamentally, we broke down. This massive volume came up and shook us out. All right, so look at this double bottom. We could have perhaps gotten some targets out of this one, right? We have to make sure that we place our next zone right there. Now, what always happens with double bottoms, and I've said this many times, right? Many times. We could always meander up and down around the next zone, because the market makers and the institutions know how us retail traders like to trade these patterns. They're aware of it, right? So they like to shake us out. They like to stop us out on both ends before carrying on the price further north. All right. I'm not so certain that we are going to be going further north, right? I mean, look, we are completely bearish, and we have been for quite some time. This volume is very bearish. However, what the setup would have been is if we saw a candle close above this next zone and then retraced back into the next zone before carrying on higher. Now, you could have caught this wick, right? You could have caught some sort of long position if you thought that this next zone was broken higher and closed above. I used the middle of the wick as my next zone. You see how large this wickage area is? It's very large. The range of the entire next zone is way too large than it should be for me to enjoy trading these patterns. Nearly 36%, right, from the bottom to the top of just this wick alone, right? However, that's okay. If you believe that this area right here was closed above and these candles closed within this resistance zone or neckline, right, but it was good enough for you and you would have entered when we would have retraced right to the bottom, and depending where you would have placed your stop, if you were careful, right, you could have sniped that quite nicely and gotten almost a 1 to 3, depending where you placed your entry, right? If you placed it more towards the middle, right, you could have gotten a 1 to 1.5, which is nothing wrong with that. That's still great. So it all depends where you place your entry and where you place your stop. However, one more thing I want to show you guys, which is brilliant. Let's remove this for now. Is another order block that was there going short. So let's remove this. Let's remove this. Can you guys see exactly where this happened? I'm going to drop this down for now. Okay. There we go. Look where this candle was sniped. Can you guys see it? And this is something that I caught late Friday afternoon my side. Right? I don't always have the time to come on and post these videos of every single position as much as I would love to, because sometimes these things happen very quickly. Look at that. That is a beautiful order block. I'm going to place the stop a couple of pips above this region. All right. So can you guys see this most recent bullish candle before the drop in price? Right? Look what price did. Look how it's pierced, right? And sort of sniped right into this yellow zone, collecting those orders, right? Faking people out because, guys, just remember at one point in time, this candle was a giant bullish candle. This was large. This was all bulls, right? Fighting to push this price higher. The market makers and the banks saw this. They were like, nope, we are collecting all of your stop losses. Because remember, they would have all their stop losses triggered all below, right? All this whole area right here, right there, right below one another. It would carry on. These would be all of the bulls' stop losses because they would see price trending upwards and they would try and jump in and they would FOMO right into this type of position. And the market makers and the bears saw this and were like, nope, let's pierce and collect these orders right here and collect all of their stop losses to get enough power to push this price down. And what ends up happening? A beautiful order block entry where if you caught it, remember I always take targets at 1 to 2, 1 to 3, which was all the way up here, right, using previous resistance or support as a target. However, if you caught the full move, we're currently sitting on 1 to 7, depending where you enter on, right? 1 to 7 risk to reward, guys, and that is not bad with one candle, with one 4-hour candle. So, moral of the story, make sure you look for every possible pattern that you can see and trade only the patterns that you have backtested. Trade only the patterns that you have familiarized yourself with, right? Don't jump into every single pattern you see on a chart on every single time frame because you will get analysis paralysis, right? You're going to have too many indicators on the screen. You're going to have too many patterns. You're going to have too many zones. It's going to freak you out. It freaks me out. Whenever that happens, I like my charts to be clean, right? Make sure you have a bias. If you are looking for reasons to short a certain pair, then look for a setup that focuses on shorting a certain pair. Okay, if you're long a certain pair, if you have a bias to go long, then look for setups to go long. Right, be patient. There is no rush. There are always further opportunities around the corner. The markets will always be there and you will always have an opportunity to make more money, right? But my advice is to practice your strategy until it breaks. Practice it, practice it, practice it. And once it breaks, fix it and then practice it again, right? Make it bend, make it burn, make it break. Okay, as if you are doing some crazy ass cardio workouts and you're getting that heart rate up, push it. Push it, push it, push it, because that is the only way that you are going to have confidence within yourself to trade these setups when you see them live in front of you happening as you are looking at these charts, especially for you scalpers that are trading on the 15 minutes and the 5-minute time frames. That's some heavy live action. That's happening right in front of your eyes and you don't have a lot of time to think, should I, shouldn't I, what should I do, because you have to move now. All right. Okay, guys, so on that note, let's wrap up today's weekly trading breakdown video. If you found value in this information, please would you go ahead, hit that like button, give us that thumbs up, hit that subscribe button, hit that little bell so you can be notified. Leave us a comment in the comment section. Let us know what you think, what you have traded this past week. Tomorrow is a brand new week, and we are almost finished up with August. Right, September is around the corner. So let's all backtest hard and keep those profits coming. Thank you so much for watching. See you all in the next video. See you later.